Happy Hump Day. Good morning and welcome. I'm Joe Jaquin, CEO of the Patriot Trading Group. And how you doing today? Well, if you have gold and silver, you're probably feeling a lot better about how today has been going. Another mega rally happening in the metals complex. Pressure on Wall Street and the bond market absolutely collapsing. We got a great show lined up for you. Listen, I told you. I'll break it all down for you as well. So we're going to go over it. We're going to go over the numbers. We'll go over where we've been. We're going to go over where we are. We're going to go over where we are going. And if I haven't earned your trust by now, I guess I never will, right? 800-951-0592. That is our toll-free number. The website at allamericangold.com. We got the articles. We got the videos. We've got all the news to keep you all comfortably disturbed right there at allamericangold.com. You can shop online. You can do all of those things. Just a quick look here. Gold's up 34, 1506. Silver, it happened. Remember, we've been talking about this. We've been waiting for this. I told you as soon as it breaks 1671, what did I tell you? It's going to 17. When it breaks 17, all bets are off. Silver's done both today. Crashing through 1671, broke through 17. Right now it's $17.10 on silver, on the September silver contracts, which is the current contract that they're in for silver. The Dow has erased all of the gains from yesterday. So, you start piecing this thing together. It started last Wednesday. Here we are a week later. The Dow is, down 1,500 to 2,000 points from where it was. And right now, down 3, picking up more steam now, 371. 25,618. I'll give you a number, 25,500. If it breaks through that, look for even more downs. It could be, we don't know. It's still early. It could be a really ugly day in the markets. It has all to do with the bond markets all over the world spiraling out of control. We had rate cuts all over Asia last night. Believe it or not, they want to tell you, if you listen to CNBC this morning, it was New Zealand's fault this time. It wasn't necessarily China's fault. New Zealand cut their interest rate by 50 basis points and got everybody starting to think, uh-oh. Did we miss something here? Is the whole world going to go negative? And I've already told you. I told you we're going to zero. I told you we're going to go to less than zero. Negative rates are coming, whether you like it or not. Whether you like it or you don't like it, that is what is coming. Now, whether you prepare or not is up to you. Right? I can't force you. Right? The president can't force you. I can't tell you how many times have I told you Donald Trump is out there almost every day telling you to buy gold. He did it again today, blasting the Federal Reserve. We need bigger rate cuts. We need more rate cuts. The 10-year note, by the way, within a couple basis points of a new all-time low. Remember, the lowest we had on the 10-year the last time, right? The last time when we went to zero was 137. Right this second, we're at 162. Earlier this morning, it got into the 1.5s. Right, it got to within a couple of basis points of new all-time lows. The entire U.S. bond market is now fully inverted. Even the 30-year note is now trading below the Fed funds rate. And remember yesterday, I told you, what did I tell you the other day? Listen, we're not getting the one and done here. Right? We're now definitely getting a second rate cut. I told you the other day, I said, really plan on getting 3. before the year ends. And everything, now we broke $15 trillion worth of bonds around the world are now negative. Spain is next. Spain is on the clock of, I guess, of bigger countries. Right now, their 10-year note yielding 0.14. By the way, the German bond yields now negative 0.58, almost 0.6% negative. Get ready, because it's coming here as well. 800-951-0592. That is your toll-free number to call. Get your order placed today. This isn't the end. This is really just the beginning of the big rally. And when we get back, I'm going to read to you an excerpt from a letter sent by Bank of America to the New York Federal Reserve concerning the bond market here in the United States. You're not going to want to miss. This is something I speculated about this probably months ago, probably 6 months ago. I was saying, remember, some of you will remember, I told you, who's buying all of this stuff? Right now, the banks are being forced to buy it. The insurance companies, the annuity, has something changed? Is QE4 closer than we think? Maybe that's why gold's really jumping today. We'll be back after the break. 800-951-0592. That is our toll-free number. Yesterday, well, don't you wish you could go back to yesterday? Remember I saw those gold eagles at 1,500. Gold's 1,506 now, up $34. So here's what I did. I can't sell them at 1,500, but what I can do is put them at the lowest price in the country. With the remainder of the 1 ounce American Gold Eagles, $1,525. So that puts them, $19? It's really $18. Here you go, $1,507, $18 over spot on 1 ounce American Gold Eagles, $1,525 on 1 ounce American Gold Eagles. Before I break down where we've been, where we are, and where we're going, I already told you all this stuff. By the way, today Goldman Sachs decided to tell you, hey, gold's going to 1,600. A little late, okay? It's going a lot higher than that. But here's what's really happening. And I know, no offense to New Zealand. I know, right? They're a big mega superpower, okay? Their 50% or 50 basis point rate cut did not cause all the turmoil. It wasn't the Chinese with pegging their currency, resetting their currency. It wasn't any of that. We've got a debt problem, folks. And I know we don't like to talk about it. Shh. It's like a little secret. Hey, it's okay. And I'm one of them. I'm guilty. I'm guilty. I want it to be okay. Right? I want to be able. Why not? Who cares if we go $2, $3, $4, $5 trillion in debt every year? It'll be okay. Apparently not. A letter was sent yesterday. And I don't know who got it, but it's Zero Hedge published it, talking about ongoing dollar and funding liquidity collapse. So remember, we just raised the debt ceiling, right? Remember that deal? Hey, let's spend a bunch of billions of more dollars that we don't have, right, and raise this debt ceiling, right? So now we don't have to worry about the debt ceiling until after the election. And I told you immediately after that, the Treasury said, hey, we're going to borrow $814 billion in the next 6 months. And, of course, little napkin math there. That's $1.6 1.28 trillion. What happened to $1 trillion? Now, here's what gets interesting. Bank of America, they did a little research, which they were talking about that the Federal Reserve may be forced to launch quantitative easing as soon as the fourth quarter. What? Quantitative easing? I mean, we just got done with quantitative tightening. Right now, I know it was a total disaster, right? Another huge mistake by this central bank. Right? We never should have done it. Right? We never should have sold off. The economy isn't nearly as healthy as they want us to believe. I want it to be that healthy. It's just not. There was no reason to do it. Now, remember what they're doing starting at the beginning of this month. So they've already started this. Right? They're going to keep selling the mortgage securities that they bought. And they're going to buy treasuries. Right? So all of their holdings, all of the previous quantitative easing holdings are all going to be in treasuries. Apparently, Bank of America says that ain't enough. They're saying that the market is in much need of liquidity. Right? And I'm starting to look at these bond yields. And they just keep collapsing. And I'm like, wait a minute. We 2.1 GDP. I mean, that wasn't horrible. I mean, it wasn't great. Let's call it what it is, but it wasn't horrible. The Dow was we cut rates with the Dow at an all-time high. Well, right next to it, right? This makes a lot of sense, though, doesn't it? It's a liquidity problem, right? We already know China doesn't come anymore, right? China is rolling off. They're buying less, right? They're buying more. By the way, China, another 10 metric tons of gold again. I mean, they just keep buying it. So here's what they said, that the bond market needs liquidity. Specifically, the United States Treasury auction market needs liquidity, or else suffer the consequences of a major liquidity shortage. Could you imagine if we had to sell, and I don't know, pick a number. Hey, today it's Wednesday. We got to sell $180 billion of debt in, 2-year notes and 5-year notes and inflation-adjusted notes and tip notes and this note and that note. And we didn't have enough people there to buy it. The bid to cover wasn't there. Right? We know the bid to cover's been falling, right? We're down, in that between the 2 and 2.5 on the bid to cover, meaning, hey, we got 2.5 times the amount of bids for the notes we need to sell. Obviously, the bids are horrible, but at least they're bids. Here's what they said. Outright quantitative easing, because they're saying that dealer capacity is exhausted. Now remember, if you're a dealer, in other words, the Fed has blessed you with, hey, you get to be the middleman. Right? The Fed doesn't sell directly to people. They sell it to the dealers. The dealers divvy it out. Used to be a real nice business, right? Great business. Obviously, with yields like this, not so great anymore. But here was the deal with that. Was the dealers, by the way, you get what's left over. You've got to bid. You've got to set a floor. And as long as everybody's over the floor, then you're good. Well, the dealers, they've been stuck with a lot of the product. In other words, they got to bid the floor, and there's not enough bids coming in that are above theirs. And they're saying that, hey, we're exhausted. In other words, hey, we can't buy anymore. We're full, right? We don't have, I don't know if they don't have the money or if they just are like, dude, we got too much now. Right? We're gonna fail a stress test because it's gonna be so unbalanced. They went on. Dealer capacity is exhausted. The Fed may need to start permanently expanding its balance sheet. Did you notice the key word in that one? Permanently. Right? What's happening in Japan? What's happening in Europe? Right? Wake up. Wake up. The Fed would likely describe this as offsetting bank reserve demand and growth in other non-reserve liabilities. A fancy word for saying, hey, we're just doing this because, we're trying to help the banks out. Right? That's, here's the spin. Regardless, it would represent the Fed permanently buying United States Treasuries outright to maintain control of funding markets. Apparently, the message was received because the Federal Reserve said that a rather urgent request from a Federal Reserve staffer seeking to meet with Bank of America and specifically a guy named Mark Cabana, Cabana, and they want all the details of the research that he put together on this. Now I'm thinking, dude, Federal, you can't do your own? You aren't doing your own? You haven't done this? I mean, you got the MIT Mafia. How do you not know this? They say that, as noted below in his report, I'll reiterate, Cabrera says that the central bank is going to have to start QE4 as soon as Q4. Okay, so obviously we're in Q3. So you start thinking about all of a sudden, doesn't that make a little more sense why gold's roaring? Or is it because New Zealand cut by 50 basis points? Really? When's the last time anybody even cared about New Zealand? How many people can even pick out New Zealand on a map? It's time to wake up now. Things have gotten serious. I have fielded in the last 3 days. So today, yesterday, Monday, everybody asking me the same question. Right? Is it a good time to sell? It is absolutely a buyer's market right now. It's a great time to buy. Sell if you need to. But the question people asked me, is gold going to stop it here? So let's review what we've talked about. Remember this year when I told you if gold breaks 1361, right? Because remember, how many times did gold get to 1350 fallback, 1350 fallback, 1350 fallback? And I kept telling you, if it breaks 1361, buy all you can. Because it's going to go to 14, and when it breaks 14, remember what I told you. I said, what is it going to do? It's going to go right to 15. Why? Because there's no resistance. Remember, from gold 1900 to gold 1400, that $500 drop in gold that occurred from the 2011 highs to 2013. Almost 400 of the $500, about 80% of it occurred in 5 days. 3 different days, gold had fallen more than $100 in a day. We just finished the last one of the three. So think about this. On June 20th, gold broke 1361. Of course, I told you what would happen. It's going to go to 1400. On June 24th, it broke 1400. When it broke 1400, remember what I told you. Remember what I've been telling. What did I say yesterday? 1500 is really not a big number. It's 1535 is kind of the first number. Today is August the 6th. There was 30 trading days between when gold broke 1400 and it broke 1500. So you think about it, gold every day was going up about what? About $3.33 a day. So that's where we were, where we are. Now, when we get back, I'm going to tell you where we're going.
This is the Phyllis Schlafly Report, a daily commentary continuing the conservative pro-family legacy of Phyllis Schlafly. Now, the president of Phyllis Schlafly Eagles, Ed Martin.
Democratic presidential hopefuls are hot on the campaign trail, rushing to outpromise each other for free handouts. President Trump, meanwhile, is pulling huge crowds and polling well and fighting those socialist handouts in every speech he gives. Earlier this summer, while 19 Democratic candidates lined up to win support from a few hundred members of the Iowa Democratic Party, President Trump returned to Council Bluffs, Iowa for a rally with more than 15,000 people in attendance. They crammed into the 8,000-seat Mid-America Center, filling the seats and aisles and much of the surrounding outdoor area where they could watch the president's speech on big screens. Many even camped out overnight just to have the chance to see Trump in action, and he didn't disappoint as he galvanized the massive crowd with his speech. Trump said, "The Democrats have become too extreme, and they've become, frankly, too dangerous to govern. They've just gone wacko," he declared. The impeachment talk by Democrats proves Trump's point. As the radical left demands impeachment hearings, even House Speaker Nancy Pelosi doesn't want to go there. She fears, and she should, a backlash by voters in the next election if the House Democrats do something so unfair to the president and to we the people. In his speech to Iowans last October, Trump promised to loosen regulations against adding ethanol to gasoline, and he's delivered on this promise just like on many others. He's keeping his promises and has started to gain immense popularity in many unexpected regions of the country. Even Democrats are turning to support him in this trend. Congresswoman Cindy Axne, a Democrat incumbent, announced that she would meet and welcome Trump to her Southwest Iowa district, including his Council Bluffs rally and a tour of an ethanol plant. A recent poll of likely Democratic caucus voters had more bad news for Democrats. A majority in that party insists that a candidate must support abortion, think climate change is the greatest threat to humanity, and ban assault-style weapons despite the Second Amendment. All of these positions are on the losing side in a general presidential election. Perhaps that is why a solid majority of Americans in another recent CNN poll expect Donald Trump to win re-election.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Do you like what you see at the Trump White House? Will President Trump continue to advance conservative ideals? At phyllisschlafly.com, you gain complete access to Phyllis Schlafly Eagles news updates and commentaries and can track our work on Capitol Hill. Go online often to phyllisschlafly.com. And thanks for listening to the Phyllis Schlafly Report.
Cue the deer, the plunge protection team in effect for the second time this morning. First time early this morning. Now they've dusted off Charles Evans, one of the Fed governors. Here you go, talking about rate cuts. Coming up for you, the Dow down 300-plus points. Gold is up $36 now, 1509. 1 ounce American Gold Eagles now $16 over spot at 15 and a quarter at 800-951-0592. By the way, silver just hit the high of the day, 1714, 1714 on silver. So the $17 hurdle crossed on silver. big upside coming for silver as well. But we're talking gold. Where are we headed now? So in 30 trading days, we break from 1,400 to 1,500. Like I said, I think it's well documented here. 1,535 is the number that we're looking at as the first big, and not even that big, but it's the first big resistance number. From 1,535 for about $50, 1,535 to 1,585. There was 3 days where gold traded between 1,535 and 1,585. So there are some anyway trades in there. If it breaks 1,585, 1,700 is the next number. And I'm leaning that way. Obviously, I don't know what will happen tomorrow or the next day. I'm just putting the pieces of the puzzle together for you. So remember what I told you on the way down. Specifically from 1,900 to 1,400. It was very quick. You had 3 different days where gold fell at least $100. We've just erased the first one. The second one starts at 1,585. And it runs to 1,700. You know where the next one starts. 1,700. Right? To all-time highs. How quickly we get there is the only thing that's really up for debate. And again, you know, when you think about gold going up $100 in 30 days, and you kind of think like, hey, this is only August. We got September, October, November, December, right? There's plenty of the year left. And if Big Bank of America is right, now the Federal Reserve has requested the research. And I think it's got to be pretty easy, right? Because I keep asking the same thing. Who's buying all this debt? Who's buying it all? And if we need to institute QE4. So now, one thing they could do, they could say, hey, that mortgages, we're going to speed it up. Instead of $20 billion a month, we're going to do $50 billion a month, $100 billion a month. The problem is, I don't know how much rolls off every month. I think what they've already done is set it at the maximum. Hey, about $20 billion of those notes roll off every month. I don't know that they can go higher. If they can actually sell when it hasn't matured yet, I don't know. I'm sure they could, but I don't. That would be a horrible precedent. So then it goes back to who's going to buy it. And the logical thing would be what? Quantitative easing 4. At that point, right, you want rates to be negative. I mean, really, don't you? I mean, if we got to create money out of thin air and to pretend to buy this stuff, we want it to cost as least amount as possible. Very, very, very bullish on gold and silver. Not because... obviously, this is what I do for a living, but just looking at the whole big picture. We are in a rate-cutting cycle. No, this wasn't a little, oh, no, we want to do a little tester cut, or what did they call it? Oh, the insurance cut. It's not what this was. It's not what this was. The escalation of the trade war obviously brings this to the forefront. The president knows it. You know, and I sit there and I think about, you know, all the things that the president is doing, and the guy knows what's going on. Rates are going to come way down. I mean, look at the 10-year note, 1.6, right? Really? I mean, the all-time low is 1.37 on the 10-year. We're getting ready to take it out. How about this, though? How well is the stock market really doing? You know, you hear them bragging about, the Dow's still up 10% this year. Of course, they don't tell you that the Dow lost all of its gains last year in December. But I decided to take a look today. 1 year ago, the Dow was at 25,584. Today, it's at 25.7, actually 25.6, 25.7. I just wrote down the math I did this morning, 25,700. In 1 year's time, the Dow is up 0.004%. Obviously, gold's up almost 25%. A year ago, gold was at 12.12. Now, I wrote down 1504, and obviously gold's gone another $5 higher, but gold's up over 24%. None of your financial planners told you to buy gold. Did anybody on the team? Well, you know what guys told you besides me? The guys I tell you to listen to. Ray Dalio told you. Stanley Druckenmiller told you. Right? They were the guys that I said, hey, these are the guys you want to listen to. They told you. They were the guys telling you what it was that you needed to do. So, but I went further. What about 2 years ago? Right? Let's take a bigger sample. The Dow was at 21,858. Doesn't that number sound familiar? Remember December? Where did it go to? This number, right? The Dow's up 17% over the last 2 years. Gold's up 20. I got one more number for you when we return. 800-951-0592. That is the toll-free number. I pulled one other number. The last day of 2017, the Dow was at 25,698. 25,007, right? The Dow hasn't moved in the last, 18 months. Gold's up in the last 18 months 17%. And I'm sitting there and I just kind of laugh because, right, they're all telling you all of these great numbers and all this and that, and numbers can be deceiving, right? But when you take, and again, not to bash the stock market, you need to own it. I say it all the time. Be diversified. What I'm telling you, though, is gold's going to outperform the Dow significantly. Now, the Dow just got done. Let's be in fairness. The Dow just got done outperforming gold, right, over the last, 5, 6, 7 years. And it's now swung the other way. And it's already started, right? We're already almost, 2 years into this and picking up steam. And now you start thinking about, is this solution, is it logical to you? Let me just ask you, does this sound logical to you? We had a debt problem, right? And call it what you want. Listen, the housing collapse happened in 2006. Let's not kid ourselves. The Dow, it didn't crash until 2 years later. And really, in Arizona, it happened in 2005. I mean, the Dow didn't crash till 2008. 2008 and 2009. And now what they did was, what did they do? They just papered over it. Right? They brought rates, right? We had negative rates. We went to zero. All of these corporations got to refinance, right? All that stuff. It's so bad now that big investors who would have normally bought bonds or stocks are now going to buy rental communities. Right? The home builders, they're getting out of building homes for people to move into them, buying a home, and they're going to make them rental properties. Right? Why? Because they need yield. And they know the big returns of Wall Street are coming to an end. The bond market, I mean, there's no yield there. The money, it will go somewhere. Right? And obviously, we're seeing it in the ETFs. Matter of fact, Goldman Sachs, they're so funny. They finally upped their gold forecast today. You know what their forecast? Now, remember, this is like the fourth time they've changed it. Their forecast was for 1475, they say. Now, I don't even think it was that high. Right? And now they're saying, well, now we're saying 1600, but they're getting smarter. Because they threw a caveat, said, hey, listen, it could go a lot higher than that. Go a lot higher than that if we get more rate cuts. Guess what? It's going to be a lot higher than that. And the money's going to flow. By the way, their ETF, this is what I want to tell you, their ETF forecast, the paper gold, they missed it by a little bit. They said, and I say this with skepticism, because like I said, this is like the fourth time they've changed it, that ETF demand was going to be 300 metric tons. They've now doubled it to 600 metric tons. They also raised central bank demand as well. Right now we're anticipating a new all-time record high for this year in central bank gold buying. And remember this, and this needs to be said. China says, hey, we added 10 metric tons every month. I mean, that's what they're doing. I mean, month after month after month. So far this year, they bought 84 metric tons, right? We're 8 months in. And it wasn't even me. I got to give credit to the researcher that was doing the work. They said, don't forget, China's the largest producer of gold in the world. Right? In China's got the biggest gold mines now. They're number one. They're the new South Africa. They mine 400 metric tons. And I apologize, I don't remember who did the research. But they said, because that's inside the country, China could be purchasing much more than what they say. And I find it very interesting as this trade war, which I told you isn't about trade. Remember, I told you this. It's not a trade war. This is about who's going to be the next world superpower. Are we going to hang on? Or is China taking over? Could you imagine if China announced, hey, our gold holdings, they're approaching like 2,000 metric tons. If they said, hey, we really got, we got 8. Hey, we got a little more than that, right? Whatever America's got, we got 8,400 metric tons. Maybe we got 9,000. Maybe it's 10,000 metric tons. You think that may make a difference? Don't count it out. It's very possible. 800-951-0592. Patriot Radio News Hour. Final segment on this Wednesday. 800-951-0592. Final segment here on this Wednesday. Obviously, if you're just joining us, a huge day in the gold and silver markets. Gold at a new 6-year high. Get ready. We're going to hear that a lot out of the gold markets. Silver. And I don't know how long the high, and I apologize. Tomorrow we'll focus a little more on silver, but silver broke that 1671 that we were waiting for. Broke through there, is now above $17.13 on silver. The Dow is under pressure. Word breaking today that the Federal Reserve may have to institute QE4 because of lack of participation in the U.S. Treasury markets. I kind of would believe that a little more than, New Zealand cut rates by 50 basis points has spooked the market. I mean, that's what the story was earlier today. The central bank has been out now. The latest was Charles Evans talking very dovishly, right? More rate cuts coming. Again, another driving factor behind gold this morning. Gold has taken out 1,500. Really, honestly, the next target I'm looking for, and I know 1,535, but really bigger target I'm looking for, 1,700. So we've taken out the first major drop that we saw in gold today, that 100-point drop. The next one comes at 1,585 to 1,700. So there's like a 115-point drop. That's the next target that I have that will fall. And then right after that, it's new. You're going to go right up to the old all-time high. So gold is, a lot of people are saying, hey, is this the end? No, this is more than likely the beginning. And I say that just because the computers do all the trading, right? And we know how those algorithms work, right? They love all of the technical stuff and all the charts and all that mumbo jumbo in the analysis, and they just start buying, right? When it passes certain numbers, they just start buying. It's why I said the silver market, right? 1671. What, am I a genius? No. But I know what the charts say, and what the charts say is what the computers do. So 1 ounce American Gold Eagles at $1,525 today it's like robbery. I mean, it really, really is. You think about, you've already missed the first, hopefully you did miss the first 25% move. But get ready. There's a lot more upside. And again, and I've been saying this more and more lately, the president's telling you what to do. And he came out again today, blasting the central bank, once again saying, see, I was right. I was right. We need more rate cuts, and we need bigger rate cuts. I think he may just get them. 800-951-0592, Patriot Radio News Hour. We'll be back tomorrow.